we go. Hello, everybody. I hope you're having a wonderful day. I'm just popping on this live stream that I'm gonna upload as a video. I don't edit anything out of my videos, nor do I plan on ever doing so. I just think that I've got nothing to hide, honestly. And like, if I make a mistake, I can always come back and correct myself. So it's not like everything I say is 100% set in stone. Although that's going to be my attitude toward things. That's typically my attitude toward things, especially when I speak them into existence. But when it comes to trading, um, I, when it comes to trading, I'm pretty much at the point now where I am trying to implement everything I've learned from the Quarterly Theory private mentorship so far. We're on currently month 11, and here's something I found interesting. So, in my opinion, you could look at this as, I think, a type of hidden sequential SMT. And the reason I say that is because this lower low, the wick, was never closed beneath, while it was on ES and Q, or on Dow, excuse me. So like what you'll see is like it all looks like on this 6-leg expansion, like specifically, it looks like it looks like they're all making lower lows, right? This one looks like it's making a lower low, and this one makes because they are making lower lows. But the explanation I have for this move right here is actually found in two things. The fact that this candle, which created the lower low, was not closed beneath. Or if it was, I'm sorry, no, I'm not looking at that, I'm looking at this. So really what you have is, I'm sorry about the, but what I really meant to say is this wick was never closed underneath. So you'll have this, whereas right here, you have this still happening. Because the closure is what signifies the importance of this low. I'll look at yes, maybe that'll be easier to understand because I can look at all of them and still. But maybe for some of you that are new, what you'll see is that this, because it's connecting the same wick, and the reason it's important is because it's the lower low, and you have a closure underneath it. So you have ES and Dow both closing beneath this lower low, while NQ failed to do so. That, I believe, is a type of hidden sequential SMT. But we're gonna get deeper. That's the first frame of logic, right? That's the first sort of the first thing that comes to mind when I'm analyzing price. And if you really take apart what I'm saying, you can build a model out of this. I'm not going to label the title as, actually, I probably will. I'm probably going to change the title because really what this is it's a so this is not sequential SMT. That's actually incorrect. It's not hidden sequential SMT. This is something completely different. This is doubling theory sequential SMT. Weekly cycle, but I don't know if I need to put that. I'm just gonna, that's what this is. Or, you know what? Let's do it like that. Doubling theory sequential SMT. The reason it's doubling theory sequential SMT is because the lower low was here, was this pocket of price. This pocket of price was not created during Q1. You see, in Q1, we had, which is Monday, so this is Friday's price action, and this is Monday's price action. What you have with Monday's price action is that it does all close below this wick. They all do the same thing. So it looks like there's no cracking correlation. So it looks like, to even the quarterly theory students, I mean, this is a very, very advanced model. This is a very, very advanced way of analyzing price. But this is what's going on. So forget this for a second. You have what seems to be lower lows being made, right? Lower low, lower low. But what you're failing to realize is that price isn't registering Q1. It's registering Q5. And the reason that it's registering this specific price action at this specific time is because this is the lower low. This is the more important piece because all of the liquidity that's held here versus here, right? This isn't a lower low, and it's in regards to this pocket of price action. In this pocket of price action, this isn't a lower low. This makes a lower low in a short term, like it makes a market structure shift. But the true lower low of this range is right here. This is where all liquidity is being held. Therefore, price is essentially making people think that it's only referring to this price action, is what I'm saying, but it's not. It's going one quarter before. This is the reason it's doubling theory sequential SMT and not normal. And not normal. Why is that? Because price is referencing not only the previous quarter, but the quarter before it. Whenever you have sequential SMT between a quarter, skip one, and then to the next, that's a form of doubling theory. It's a doubling. It's going back 2 spaces in time, or projecting forward 2 spaces in time simultaneously. It's not. It is referencing the previous quarter as well. It is still referencing Q1, but it's registering sequential SMT with this pocket of price action here. Therefore, it's not normal sequential SMT. And not only that, but this is hidden sequential SMT, to be more specific. So it's really doubling theory, hidden sequential SMT. There's other applications for doubling theory. This isn't the only sort of categorization or piece of price action that you can label as doubling theory. This is one of them. There's more, but this is one of the applications. Is instead of comparing the previous quarter, you're comparing to the one before it as well. Therefore, what do you do with that? You can use that. So now you have your higher time frame sequential SMT, which is finalized here. It gets really close. Oh, that's so tough, man. That's like so close. It doesn't do it. It's still technically a failure swing, for a lack of a better term, a failure swing, because this closure and this opening happened still technically below this market structure shift here. And so what does price do? It closes, creating sequential SMT or hidden sequential SMT, and then on the next candle, you have your sweep of liquidity, and then price begins to run. Therefore, what do? You wait for the closure at 8. You wait for the closure. If you see this exact sequence of price, on the weekly cycle in the 1 hour time frame, you know you're dealing with doubling theory, hidden sequential SMT, and or regular sequential SMT, not including intermarket. I'm just doing normal price, actually, just normal indice market for this comparison. I'm not going to be using GBP or Euro or anything, but we could if we want to, right? If we wanted to get really deep. But this is it. This is a confirmation when this closure fails and these and Dow and ES or ES and Dow do have their 8 o'clock candle. Going into 9 o'clock, you wait for a liquidity sweep. You wait for the sweep of excuse me. You wait for the sweep of the closure of the candle before it or the low. So you're looking to sweep either the closure or the low of the 8 o'clock candle. And then that's going to be your liquidity sweep into, and then you could use a PSP if 8 o'clock's a PSP, it's higher probability, which it is not on, it's not a PSP, but your PSP can also be on a lower time frame. So say we take this 8 o'clock. This 8 o'clock is going to be huge. 8 o'clock going into 9 o'clock, because once you have that closure, I'm going to actually turn off the new week opening gaps right now. I'll turn them back on in a second. But now you have your breaker, right? Or a breaker. There's so many different applications for a breaker. And even Day's given us multiple variations. He's never we even have precision breakers, which I can't even get into that. That's the fucking another crazy thing. Which I think I don't know. I was gonna do precision breakers, but I'm more interested. I'm kind of liking in this direction that I'm going. So okay, so we have our 8 o'clock closure. That's gonna be hit. That when we have that, we just wait for a liquidity. What do? We mark out our breaker, which is the candle, the entire 8 o'clock candle. Go into a 5-minute time frame, because the 5-minute time frame is synchronized with the 1 hour. Once we have that 8 o'clock, you can simply wait. 8 o'clock going into 9 o'clock. Okay, 9 o'clock. You wait for a sweep of this breaker. You wait for the breaker to essentially just get turtle souped. In at least ES or NQ. You can check Dow, but to just make it easy and reasonable, you just use ES and NQ. And you wait for this 8 o'clock candle to get swept. So going into 9 o'clock, you have a liquidity sweep at 9 o'clock exactly on ES and also NQ. So you have that liquidity sweep. I think there's a new week opening gap too. Yeah, so this was inside of, whenever you have opens and closes inside new week opening gaps, it's high probability for reversal too on lower time frames. I don't know if you guys seen that, but you have price tapping into a new week opening gap on ES while it's opening and closing within a new week opening gap on NQ. That's super high probability for reversal. So you have your liquidity sweep of the breaker while it's trading into a new week opening gap. And then this is also a PSP. This candle right here is also a PSP. So now you have a PSP on the lower time frame. That is your confirmation for this 8 o'clock hidden sequential SMT. This is your hidden sequential SMT. This is your PSP on a lower time frame, and then you have your reversal. And that is that's it. That's what happened today. And the price rallied and just kept going, and it's still even continuing. That's how powerful doubling theory is. It's insane. Doubling theory is actually crazy. Like, the fact that nobody talks about this either is like nuts to me. Like, we really need to be talking about how powerful this is. Even Day's not talking about this. I mean, he's talked about it, but this is like, he's gone over it a couple times. I'm not saying Day's never spoke about it, but like, you have to put all the pieces together and then it starts making more sense. and then you're like, oh, and then that's what that actually is, and then it's just you just keep doing that over and over again. And then we can even use, I can even mark this out, because what this is, and I'm going to change this color to something else, maybe like a white. No, that doesn't do anything. Hold on, just give me a second. Ooh, there we go. I like that. Okay, I like that. This is what's known as implied new week opening gap because of ES. And then, yeah, whatever, I could just do this. Okay, hold on, give me a sec. Okay, so then we have our implied new week opening gap. Well, we have doubling theory sequential SMT. So let me go back to the 1 hour time frame. This is our high probability PSP right here too. So I can take this off. You guys get what that is now. That's what I'm gonna do. It's really this candle that creates it's really this candle that creates the sequential SMT. Okay. Right. Okay. And then this right here is gonna be, actually no, I want this to be, okay, that's fine, that's fine. This is gonna be our PSP. This is gonna be our entry model. So once you have a PSP form, once you have the sequential SMT, PSP into, it has to, and if you want it to be high probability, it has to be in a new week opening gap. So if you look, yes, it's tapping into this new week opening gap, which is this black sort of shadow. I just highlighted it in blue here. And then that's why I called it implied new week. Oh wait, let me see. Hold on. You can't. I just noticed you can't really see. Okay, there we go. Now you should be able to. There we go. Okay. So now you know what this is. And let me actually turn the. Just give me one sec, guys. Hold on. Let me turn up this just a little bit more. Okay, perfect. Let me do this. So guys. Okay, this is going to be our PSP. And then once using this as your entry model. So if price trades back into this PSP, that's where you would take your entry. So right here, any of this. So if there's any candle that trades back into this, you look for buys. So on ES it gave one opportunity, for NQ it gave one opportunity, and then for Dow it actually created a fair value gap where price trades back into it and then keeps on um, pumping, I guess would be. I don't know if I'd use the word pumping, but it definitely triggered a buy mode to where now it's targeting these highs, right? So I just pumping just didn't feel like a mature enough word, but essentially that's what it was. Price decided to go into buy side liquidity. Anyway, that's it, man. That's the model. You got doubling theory on weekly cycle. If there's a 90-minute cycle, great, you can use that. If not, just use a lower time frame PSP into a higher time frame, or not higher time frame, into a PDRA, like a new week opening gap, or if there's fair value gaps, you can use fair value gaps where we were inside of a higher time frame. Looks like of some kind. We were in a higher time frame imbalance, I guess. I don't know what time frame that is. Let me check. We were inside a, what is it? It's like probably like a daily. Yeah, so this happened. So, and funny enough, the low, you can't even make this up, man. I mean, I wish I was bullshitting you guys, but I'm not. I wish I was bullshitting. The low, this lower low actually swept the bottom of a daily fair value gap. So this was also a liquidity sweep of a daily fair value gap. It was a, what do they call it? What do ICT traders call it? PDRA high and PDH and PDL. This was a PDL sweep as well. So you had a PDL sweep into a implied new week opening gap with ES sweep with and when I mean sweep, I just mean price trades back into this gap. Price is trading back into this new week opening gap, which is what this blue this blue square is supposed to symbolize. And then you have actually price opening and closing within a new week opening gap in itself, which is high probability for reversal. When you see these opens and closures, you know price is about to reverse. Makes a higher probability. And then your lower time frame PSP with on top of all that weekly cycle, doubling theory, sequential SMT, or to be more specific, hidden sequential SMT. And so yeah, folks, that's all I got. I hope you enjoyed. You know, I know I don't sugarcoat things very much. I don't sugarcoat things. I don't even drag on these models very long either, and it's just because it's already so deep and complicated, and there's so many confluences that I could just keep going and going and going and going and going. So yeah. Actually, if you guys want to get a screenshot, I'll give you guys an opportunity to do that so you don't have to go back. But this is what essentially, if you're interested, this is essentially what you want to see for this model on a weekly cycle and then on a 5-minute time frame. So yeah, and then like I said on the 1 hour, I was gonna I think I'm just gonna do it. And another confluence that you can use on top of all this is a precision breaker. So precision breaker is essentially a breaker that is either also a PSP. A precision breaker isn't gonna be the candle that begins the run on liquidity. It's the candle right before it. And if it's a PSP, it's higher probability. And or if it's a precision candle, it's higher probability. Which this one actually is a precision candle. So this is a breaker, but it's also a precision breaker because it's a precision, or it's actually a PSP. So, and the reason I chose this again is because, like, once again, it's the lower portion of price action, meaning there's a lot of liquidity here. While there also is a lot of liquidity here, and there's also a lot of liquidity here. 8 o'clock candle wasn't targeting buy side liquidity; it was targeting sell side. So this is what you're paying attention to. When you see this expansion, when you see this attack on liquidity during these specific moments in time, you know that price is looking to change gears. This is a down close candle right before a run to buy stops. Not only that but it's also a precision swing point. You take that and you can use it either in the quarter. You can use it essentially the same way you look for sequential SMT. You can use it to reference the next quarter, but you can also use it 1 quarter ahead. Once you go past this quarter though, so once you take Friday's price action and you're referencing it to Q1 going into Monday, this would be considered sequential, a sequential, just a normal precision breaker. But once you go into Tuesday, now it becomes a doubling theory precision breaker. And yeah, that's just what it is. I'm not going to really exactly what that is. So, with that being said, when you extend these out in price action, you can use them to reference. Let's go to Tuesday's end. Yeah, there we go. Tuesday's end's right here. You can use these to reference to sort of gauge price and essentially you're giving price a high probability order block is what it is. It's a high probability order block, or how a high probability order block should act. So I took this candle, and then now what you can do is see how price is reacting to that precision candle, or I'm sorry, precision breaker. In ES, closed below and opened below. In Dow, we were way below it, way below it, way below it, way below it. Look at how far we were below this specific candle right here. Way below it. On NQ, we closed and opened with inside of it. We swept its liquidity. We swept the liquidity. But if you take the candle as a whole, we did not close and or open below it, meaning that's another crack in correlation. Price is referencing this specific candle right here 2 quarters in the future and referencing it as a high probability order block. Once price closed below it on ES and then opened, price was prime for reversal. This is a precision. So what this is it's a precision breaker, but it's a doubling theory. So, a doubling theory, because you can use it 2 quarters ahead. Like I said, you can use it 2 quarters ahead and below. I'm sorry, you can reference a precision breaker either 1 quarter ahead or 2. So, yeah, and then you sort of just use them like you're referencing the lower low or the higher high. Just when you see price doing something to one and then doing it differently in the other assets, you know that there's prices essentially setting up for reversal. So when NQ was displaying a sense of weakness where it was not able to close, underneath this candle, well, ES and Dow had no problem. Smart money knows price is getting ready to turn around. But anyway, yeah, that's it, guys. Hope you enjoyed. I hope y'all